There are two ways that you can get paid now as an investor. Now, this same applies whether you are the employer or whether you are investing your money into different assets. And the way that you get paid are through either cash flow or through value growth, meaning the increase in the value of investments, also known as appreciation. Starting with cash flow, the way it works if you own the company that you're working at is you work in the company, you get a salary. That's not your cash flow. That's your salary as an employee in the company. If you start a company and you are the CEO of a company, you get paid a salary for being the CEO. Now, if this company that you own, that you're working in, makes a profit, maybe you generate $1 million a year in revenue. You have $500,000 a year in expenses. That means you have $500,000 sitting in the bank at the end of the year. That profit is what you are entitled to as the owner, not the CEO, but the owner of the company. Now, as a smart owner, if you're starting up and you want to grow, you're going to take all or most of this money and you're going to reinvest it back into the company. That way you can grow this company bigger, faster, and stronger. But as you start to grow, maybe you're going to want to start using some of these profits for yourself or start to pull some of these profits out. So now you are entitled to those profits as the owner, and that is now your cash flow. If you don't own the company that you're working at, that's okay. You can do the same thing in other assets. How do you do that? Well, you can invest in stocks that pay out a dividend. You can invest in real estate that's paying out rental income. Now, what you're doing is you're buying a business on the stock market, or you're creating this rental property business in the real estate market. And now, if this thing that you own is putting out some cash flow, is putting money in your pocket, that's cash flow. And the key for you now as an investor is to make this as passive as possible. I have other videos on my channel that go over how to do that. But the key here is now is you don't want to be spending all of your time monitoring your investments and managing your investments, because now it's not an investment, it's a job. Your job as an investor is just to own the asset and get paid with the cash flow. You can do that in real estate by getting a property management company, and in stocks, well, you have to invest in the right things. Maybe invest in stock funds, ETFs, index funds, mutual funds that pay out dividends. That way now you don't have to actively monitor your investments all the time, but you can still generate that cash flow. Now, in this cash flow, what you're getting is you're getting your share of the profits, and they're distributed out to you without you having to sell your asset. That's one of the reasons why I love investing in cash flow personally. I don't recommend what I do to anybody, but I love investing for cash flow because I don't have to sell my assets. I can get paid just for owning the asset. And now my goal is to just stack the cash flow year after year after year, make the cash flow a little bit bigger. That way the cash flow, once that funds the lifestyle, now you are financially free. The second way you can get paid is through value growth. Now, if you are the employer of the company and you reinvest the money back into the company, now what you're trying to do is you're trying to make this company more valuable. If your company makes $1 million a year, you have $500,000 in expenses, you have $500,000 worth of profit, that means your company might be worth 10 times profits. That means your company might be worth $5 million if you generate $500,000 a year in profit. So if your company is worth $5 million, the way that you can increase the valuation is by increasing the profits. Now, if your company can make $2 million a year in revenue and you have $1 million a year in expenses, that means you have $1 million of profit. Now, if you apply that same 10 times multiple to that profit, that means now your company is worth $10 million. You become more wealthy on paper because the value of your investment, the value of your stock, the value of your company is now more valuable. Again, if you don't own the company that you're working, how do you do that? Well, you can invest in stocks, you can invest in real estate, in growing areas, in growing demand areas, in growing sectors that become more valuable. If you invest $100 into a company and the stock price doubles, well, now you just doubled your investment. Now, there is more risk here because there's a chance that your investment value will not go up. Just like with your company, there's a chance your company could go bankrupt. Well, if the value of your investment doesn't go up because of the economy, because of other things, you don't get paid until you see the value of investment go up and you sell. But this is where you have to understand what is the right investment goal for you and make sure you make investment decisions accordingly. And even when it comes to value growth, there are some investments that are going to be more risky than others. Like if you go into the stock market, you can invest into a high growth company, a company that's making $0 in profits because they're reinvesting all of their money and some by taking on debt, by taking on more investors to grow the company as big as possible, as fast as possible, because they want to grow the value of the company. That's one way to do it. Or you can invest in companies that are already established, that are already making a healthy profit. And now they're just trying to get the slow and steady growth. The slow and steady growth is less risky, but you're going to see less upside. The fast and aggressive and risky growth is more risky, but you have the potential to see more faster appreciation. And this is where, again, your goals are very important to understand. If you're willing to take on more risk, well, then you can make different investments than if you don't want to take on as much risk. And if you want cash flow, well, again, you're going to make different investing decisions than somebody here who wants to just see the fastest appreciation. Not to mention the fact that when you get cash flow, you got to pay taxes on that cash flow. If your stocks pay out a dividend, if you're getting profit distributed into your pocket, that's taxable income. Versus if you see your stock price grow from $100 a share to $500 a share, you don't pay taxes until you sell. So you just have to understand now what are the goals that you want, but the key before you get there, before you start overanalyzing your investments, is to get started and to stop thinking like a broke person, which is, oh no, I'm just making money, I might as well just go and blow all my money. You want to be smart. Understand what smart employers are doing. Smart employers are taking the money that the company makes and they want to put it back into the company. Smart employees want to do the same thing. You want to take the money that you're making and put it back into your own company. Every person in America needs to be a business owner. Period. If you want to become wealthy, you have to be a business owner. You don't have to go out and start a company. You don't have to go out and operate a company. You don't even have to go out and manage a company. But you have to own a company if you want to build wealth in a capitalist system. And this can be completely passive, but you have to start putting your money to work. Now you got to understand that investing has risks. You might see your investment lose value. If you see a recession, your investment might go down in value. If you see a market crash, your investment might go down in value. But the key is to continue investing and to continue holding on to good investments, because that's where the real wealth is built in this economic system. It's not built from your salary. It doesn't matter if you are the employer or the employee. You have to put your money to work if you want to build wealth. If you enjoyed this short clip from my longer videos, here's another clip that I think you'll love. And while you're at it, if you're interested in learning more about how to start generating passive income, our team put together an amazing guide on how to start generating passive income for free. All you gotta do is click that button right over there. Thank you for watching, and as always, keep hustling.